Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Table for three. Donald Trump pushes for a trilateral meeting with Ukraine and Russia, with the US and its allies now promising future security guarantees for Kyiv. European futures tick higher with global stocks close to record highs. Treasuries hold steady after S&P confirms its long-term credit rating for the US, citing higher tariff revenues. And Intel soars on news of a $2 billion investment by SoftBank. Bloomberg learns the US government is considering taking a 10% stake in the chipmaker. We bring you our scoop. Good morning. It is Tuesday, 19th of August. Let's check in on these markets then. Modest gains at the close of European stocks yesterday, up just 0.1%. US futures essentially flat by the end of the close. The focus, of course, on the geopolitics and the meeting, of course, at the White House. And it seems that at least on the surface, there's been some gradual progress on that front. European futures then pointing high by 0.2%. FTSE 100 futures here in the UK looking to add just 13 points. S&P futures, again, after the flat close yesterday, a little softer, down 0.1%. Nasdaq 100 futures pointing lower by 37 points. The focus, though, really for the markets beyond geopolitics is all about that speech, of course, on Friday. Fed Chair Jay Powell at Jackson Hole. Let's flip the board and have a look cross-asset then. The Treasury markets in focus. S&P confirming their views in terms of the creditworthiness of the US government and pointing, interestingly, to that increase in terms of revenues coming through from tariffs. 433 right now. You've seen 3 days of a little bit of selling pressure coming through for Treasuries, and markets and traders maybe readjust their views in terms of what Powell may say about September for the Fed. Euro-dollar at 116, largely unchanged. Brent in focus, of course, and that ties to what we've been hearing from the presidents of Ukraine and the US. Currently down 0.6%. Gold up just 5 points, close to 0.2% higher. UBS, by the way, raising their forecast for the yellow metal for 2026 on increased Fed cuts and weaker dollar. Let's check in on the Asian markets right now, how they are faring with Chinese stocks still close to those decade highs. Min Low standing by in Hong Kong.
Hey, Tom, yes, across the region, we are seeing this sea of red here and the Asia-Pacific index just treading water today. And it looks like investors are still a little bit on edge as we look towards Jackson Hole. But we're keeping an eye on Japanese bond yields because today was a big day. There is the auction for the 1-year bond as well as for the 20-year bond. And you look at the bid to cover ratio, right, just not too long ago, the demand looking pretty tepid below the 12-month average. If we flip the board, you can see this melt up across the Japanese bond yields here, and it continues to be those political uncertainty domestically and as well as that fiscal spending surge that investors are concerned about. So this continuing to be a drag on the fixed income market. Of course, we're also looking ahead to the CPI data from Japan on Friday, but we flip the board, take a look at what's happening in China, and again, quite a different picture here, a sea of green, and we continue to see this slow burn, right, in this surge in interest in the Chinese market. If you flip the board, you can see that the margin balances now is hovering close to the levels that we have seen back in 2015, and a lot of interest now coming through from the institutional investors. That's why some traders are saying that this boom is different from the boom and bust cycle that we have been seeing of late, because a lot of retail investors are still on the sidelines. It's a sort of slow burn that the Chinese government has been wanting to see. Hopefully that will create a sort of wealth creation effect that could lead to translation into better consumer sentiment in the real economy. So yes, we are still keeping an eye on this A-share rally in China. Tom?
OK, the Shanghai Comp up 0.4% so far in the session. To your point, Min Low, thank you very much indeed with the check on the Asian markets, joining us out of Hong Kong. So President Trump says he has pitched a one-on-one meeting between Russian President Vladimir Putin and Ukraine's leader Volodymyr Zelenskiy. That would be followed by a trilateral summit involving all three of them. It comes after his Monday meeting with Zelensky and several European leaders at the White House.
In a very significant step, President Putin agreed that Russia would accept security guarantees for Ukraine, and this is one of the key points that we need to consider, and we're going to be considering that at the table also, like who will do what essentially. I'm optimistic that collectively we can reach an agreement that would deter any future aggression against Ukraine. And I think that the European nations are going to take a lot of the burden. We're going to help them, and we're going to make it very secure.
Bloomberg's Oliver Crook joins me now from Brussels, been following all of this for us. Remarkable scenes again from the White House. We see that on a fairly regular basis, but nonetheless, to see so many European leaders alongside, of course, the president of Ukraine, sitting at that table with the US president, with President Trump. Flattery, it seems, was one of the tactics. Maybe a win for European leaders, certainly a focus on security guarantees.
Yeah, Tom, I think you're right to highlight that. It's a very rare event to see all of these leaders come and sit in one place, whether it's the East Room of the White House as it was on this occasion. And this was not like an organized G7 meeting. This is something that happened impromptu. These are people that lead countries across the world, dropped everything, decided to arrive on Monday to the White House to have these discussions with President Trump. And that is, Tom, as you say, part of the European attempt to validate Trump's effort. They may not be 100% pleased about how he's going about it, but there is a consciousness within Europe and within Ukraine as well, since the sort of catastrophic meeting back in February, that the Trump train, in terms of dealing with Russia and Ukraine, is leaving the station. And maybe even if you're on that train and you're not exactly sure about the path it's taking or its final destination, the only thing worse is not being part of that conversation and not having any influence in that conversation. That is clear to European leaders, which is why they were there on Monday yesterday speaking with Donald Trump. Ahead of that meeting, as you saw them around the table there, they took questions, or not questions from the press, they made sort of statements individually, so to sort of outline what their priority was. Very clearly, what they wanted to do was make progress on the thing I think everybody has got questions about. What are these Article 5 style security guarantees that the United States is talking about? What is everybody's role in it? And what is the U.S.'s commitment to that? I think they will be reassured by the fact that Donald Trump continuously throughout the day reiterated that the United States is committed in some form to these security guarantees. Again, a lot we don't know about them. We also had a number of the leaders pushing again on this idea of the ceasefire, which Trump had sort of abandoned over the last 48 hours. That was namely Emmanuel Macron and Friedrich Merz, who are pushing that, but also this idea of this trilateral meeting going forward that needs to take place between Trump, Zelensky, and Putin. They all said that this is going to be an absolute priority. So I have to say that on those 3 points, we don't have a total clarity on what will happen next. We do not have the sort of details on the Article 5 security guarantees. Does this mean European troops within Ukraine as defensive troops? Does it mean that the United States would engage if Russia were to impose on Ukrainian sovereignty again in the future? Those are still open questions. But again, there is a clear impetus by the Trump administration to make this move quickly. I mean, maybe in the next couple of weeks, could you see a meeting? That is the sort of state of play as we enter Tuesday.
OK, so the details in terms of those security guarantees still to be worked out, and we watch for any progress in the coming days. On the sequencing of the next steps then, Ollie, you touch on some of this, but how should we be thinking about the prospects of a meeting between Zelensky and Putin, and then the meeting that may follow that? What is the sequencing? What do we know? What is the likelihood that these meetings will actually take place?
So what I believe that the European leaders would like to have seen is just a trilateral meeting kind of right out of the gate. That is something that they all sort of emphasized in their discussions in Washington, D.C. yesterday. However, we did hear from President Donald Trump after the meeting, and we heard from him on Truth Social saying the following. He said, "At the conclusion of the meetings, I called President Putin and began the arrangements for a meeting at a location to be determined between President Putin and President Zelensky. After that meeting takes place, we will have a trilateral meeting, or trilat, which would be the two presidents plus myself." So that is going to be as far as the most concrete information we've got, what will be coming next. We also heard from Zelensky yesterday talking about the prospects of that trilateral meeting, its importance in getting the war concluded. Have a listen to what he had to say.
We need to stop this war, to stop Russia, and we need support, American and European partners. And we will do our best for this. I think we show that we are strong people, and we supported the idea of the United States, of personally of President Trump, to stop this war, to make a diplomatic way of finishing this war. And we are ready for trilateral, as President said. This is a good signal about trilateral. I think this is very good.
And Tom, just two final points here on the sort of sequencing and the next steps. The obvious sort of impetus from the European leaders is to give a full faith effort that Trump's technique will be a successful one. But if it fails to be, as many of the European leaders have suspected in the past, that Putin is just playing for time, they want to make very clear that their side of this battle, their side of this war, was not the impediment to peace. And Tom, the other next step is whatever these security guarantees are, these need to be sold domestically to the audiences in France, in Germany, in the United Kingdom. If we're really talking about potentially in the future deploying national troops as peacekeeping operations within Ukraine, that is not a done deal at the national level. So that is going to be part of the work for these European leaders as they return back to their homes.
OK, you highlight a really important detail, of course, that has to be worked through domestically as well. Bloomberg's Oliver Crook in Brussels with the latest on that meeting and future steps. Ollie, thank you. Meanwhile, to the fiscal picture over in the US, S&P has affirmed its AA+ rating for the United States, saying tariff revenues will partially offset weaker fiscal revenues from Donald Trump's so-called big beautiful bill. Let's get more from Bloomberg's Valerie Teitel. Val, what did S&P say? Is this a win for Trump?
You can call it a win for Republicans that this big, beautiful bill, the spending in the big, beautiful bill is looked at by S&P's ratings as frankly okay because it's offset by meaningful tariff revenue. That's the kind of words they used in this statement overnight. They said amid the rise in effective tariff rates, we expect meaningful tariff revenue to generally offset the weaker fiscal outcomes from that big, beautiful bill, as you mentioned. Now, this comes along data from July showing that tariff revenue was around $30 billion. And Treasury Secretary Scott Bessent, speaking to Bloomberg last week, says he expects tariff revenue in this fiscal year to exceed 1% of GDP. That would be exceeding $30 billion for this year. So a better picture when it comes to tariff revenue means the bottom line for the U.S. government is looking a bit better. However, we have seen a creep higher in long end yields off the back of this. It might not be deficit concerns that are leading those 30-year yields to rise. Maybe it's worries about inflation after that hot PPI print, or perhaps it's boosting economists' expectations of growth. Remember, the long end is basically trading off of inflation and growth expectations as well as deficit concerns. So you could argue the move higher in yields recently has been on a better economic backdrop.
Meanwhile, Val, here in the UK, traders betting that the Bank of England will hold rates for the rest of the year. It's been quite the turnaround just in the last couple of weeks, really. Earlier this month, there was a higher chance. Markets were betting that there would be another 25 basis point cut by the end of this year from the BOE. Now that's at 50-50. Why?
Frankly, the data last week came in better than expected. We did not get our worst fears confirmed about the labor market. And then the GDP figures on Thursday also came in better than expected. We do have UK CPI tomorrow to keep on this narrative. But what the back end of the gilt market is telling us is that better growth expectations just boosting these yields higher. Now, you can also complicate the fact that, yes, better growth expectations means maybe higher yields, but that also reduces the fiscal headroom for the UK government. And what makes matters worse is UK linkers. Those are trading at highs of the year in terms of yield, the highest actually since 1998. They surpassed the Liz Truss highs yesterday. And this is a very complicated thing for the UK government. 25% of their debt pile is in inflation-linked bonds, which means as long as inflation is above target and running above the Bank of England's target, it means that their debt financing cost to finance these linkers rises as well. So that's something that also complicates this kind of doom loop that the UK has gotten themselves into.
Wow, that 25% figure, that's chunky, isn't
highest
it?
In the G7.
Is it the highest in the G7? OK, there's the challenge. Bloomberg's Valerie Teitel, always given the additional detail and context. Val, thank you on the market check and, of course, on the repricing around the Bank of England. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayB or DAYB Go on the terminal. Of course, the details, the analysis and the fallout, or at least the implications of that meeting at the White House yesterday between European leaders and the presence of Volodymyr Zelenskiy and Trump is in focus. All of the context around those conversations and the next steps being reported out for you on that page. Coming up, could an end to the war in Ukraine see additional supplies of gas being put on the market? Could it ease the prices? Prices are already down in terms of European gas spot futures. Is there more that can be done on that front? The European gas markets in focus, tied, of course, to that conflict. That's coming up. This is Bloomberg.
stop this war, to stop Russia, and we need support American and European partners. And we will do our best for this.
If everything works out well today, we'll have a trilat, and I think there will be a reasonable chance of ending the war when we do that.
The coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees.
Volodymyr Zelenskiy, Donald Trump and Keir Starmer speaking in Washington yesterday after those meetings. Meanwhile, European natural gas prices fell to a fresh 2025 low ahead of Trump's meeting with Ukraine's Volodymyr Zelenskiy. We are not there yet, of course, but an agreement to end the war could ease global supplies of gas. Let's get more with our European energy reporter, Priscilla Azevedo-Rocha, in terms of how to think about the gas price changes on the news flow when it comes to the conflict in Ukraine. What is behind the fall in prices? The conflict continues. We do not have additional Russian gas on the market, and yet prices have fallen. What is behind that, Priscilla?
Hi, good morning, Tom. Behind this fall in prices, there's this market expectation that there's going to be more gas supplies, Russian gas supplies, available in the global market. That doesn't mean that Russian gas will return to Europe. That means since Russia's invasion of Ukraine and when Russia cut the supplies to Europe, Europe has started to rely more on global markets, which means that it competes with other countries, with China, with Southeast Asian nations, with Egypt, for seaborne cargoes. With more Russian gas available, other buyers could access this pool, and there's going to be less competition for Europe. Why do I say that it's going to be harder for Europe to access this? Ursula von der Leyen has stated over the weekend that the EU intends to progress with sanctions on Russian energy, and at the same time, the EU has agreed on the trade deal with the US to buy a lot of US energy that is going to come online. So it's not looking like this Russian gas will come to Europe, but the availability of supplies in the global markets will ease the pressure.
OK, so the Russian gas may not be coming to Europe anytime soon. But if there was, Priscilla, if there was a peace deal between Ukraine and Russia, what kind of time frame are traders thinking about in terms of additional Russian gas on the global markets?
I think rather than timing or how soon this is going to come back, the market expectations is in which shape or form. Let's say that if there's an agreement, we're talking here if and when, there's this conversation in the markets, there's the expectations that the US could lift sanctions on Arctic LNG 2, which is an LNG project in Siberia that is being sanctioned by Joe Biden, by the previous administration. And if sanctions are lifted in that specific project, those vessels are ready to go. And some of them are already going out to countries that are not linked to the sanctions. So we could see more LNG coming to the market as soon as those sanctions are lifted. In terms of pipeline supplies, I think this is going to be a bit more complicated. I don't know if you remember, but earlier in the year, there was the end of the transit agreement for Russian pipeline supplies through Ukraine to some countries in Central Eastern Europe, including Slovakia and Austria. And these pipelines flows, they could eventually return, but that would entail an agreement with Ukraine on what the conditions of the supplies would be like. But in terms of like the global balance, LNG will matter more because cargoes could be moved around the world to meet demand, while pipeline supplies are very restricted to specific countries, including Slovakia, Hungary, that relied on the supplies previously to the end of this agreement at the beginning of the year.
OK, European energy reporter Priscilla Azevedo-Rocha, thank you very much indeed in terms of how we should think about the potential of additional Russian gas on the global markets. Coming up, to technology, shares of Intel soaring in after-hours trade after SoftBank buys a stake in the US chipmaker. We're going to bring you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. SoftBank has agreed to buy $2 billion worth of Intel stock in a surprise move to shore up the struggling US chipmaker. Meanwhile, Bloomberg has learned the Trump administration is in discussions to take a stake of about 10% in the company. Let's get more with our Asia Tech correspondent Annabelle Drulas standing by in Hong Kong. Annabelle, what is the motive then? What is the rationale for SoftBank buying $2 billion of Intel?
Yeah, that part is a little bit unclear. I mean, both companies put out a statement when this was confirmed saying that they were really, of course, echoing the strength of each of them. But it's also interesting the timing, given that you had Lip-Bu Tan, for instance, meeting with Donald Trump just a few days ago. There has been some questions whether this is, of course, politically motivated. But as an aside, I mean, you are seeing sort of some questions, I guess, in the share price reaction today, because you've got SoftBank, for instance. It's been very much under pressure at one time, down the most since April of this year, for instance. Intel, on the other hand, has absolutely soared in post-market trade. In the session, we actually saw it closing down 4%, but it has more than rebounded since, rising 5%. But just to recap, as you said, the main headline here is that SoftBank is looking at a $2 billion investment in Intel. They're buying stock, new shares that are going to be issued at $23 a share. That is a small discount to the last close. And essentially, it just continues to build their investment into the AI story. SoftBank had sort of perceived as being a bit of a laggard in this space, but some of their stocks, for instance, in the investment portfolio include Nvidia, TSMC, of course, and you do have SoftBank very heavily involved in Project Stargate as well.
In terms of the US government stake, this had been reported out, of course, Annabelle, by Bloomberg last week. Now we have the details. It could be 10%. What do we know about the thinking of the US government, the Trump administration, in terms of their position around Intel?
Yeah, this is an interesting one as well. I mean, of course, Lip-Bu Tan, for instance, was someone who was facing a lot of pressure from President Trump just a few weeks ago. President Trump seems to have very much reversed his course or his thinking around Lip-Bu Tan's fate at the helm of Intel as well. But what we understand, and this is a Bloomberg scoop from people that are within the Trump administration, plus those that are familiar with the matter or close to the matter, is that essentially Intel had been set to receive funding through the US Chips and Science Act. That's going to be converted into equity instead. And so if it were about to receive, say, $11 billion through the Science Act, that would instead be converted again into that near 10% stake, as you said, around a 10% stake from the Trump administration. Of course, it might not proceed. The size of that stake could change. But it is really notable, given that you do, of course, have the US really pushing to try and shore up that onshoring, of course, of semiconductor capabilities and really trying to bring back that presence to the US as well.
OK, Asia Tech correspondent Annabelle Drulas, thank you for the latest in terms of Intel. Well, that SoftBank stake and, of course, the US government potentially looking to take 10%. And join Annabelle and Sherry-Ann for Bloomberg Tech Asia on Friday this week, where they will be looking at the rise of humanoid robots. Meanwhile, Bloomberg understands that Shein is considering moving its base back to China to help its hopes for a Hong Kong IPO. The fast fashion retailer is currently domiciled in Singapore, but sources say it has consulted lawyers about setting up a parent company in Beijing in the hope that it would sway authorities in China to sign off on its listing in Hong Kong. The company is running out of places to float after failing to secure regulatory approval in New York and London. Coming up, President Trump pushes for a one-on-one meeting between Vladimir Putin and Volodymyr Zelenskiy following talks with the Ukrainian leader. We're going to discuss with Hanna Shelest from the think tank Ukrainian Prism. That analysis is coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Table for three. Donald Trump pushes for a trilateral meeting with Ukraine and Russia, with the US and its allies now promising future security guarantees for Kyiv. European futures tick higher with global stocks close to record highs. Treasuries hold steady after S&P confirms its long-term credit rating for the US, citing higher tariff revenues. And Intel soars on news of a $2 billion investment by SoftBank. Bloomberg learns the US government is considering taking a 10% stake in the chipmaker. To the markets then. European stocks eked out modest gains of about 0.1% by the close yesterday, looking to build on that today just by 0.1%. Range-bound, really, equities as they look for the next major catalyst. It ultimately wasn't that meeting at the White House. Possibly it's going to be Jay Powell. We know the focus is there, of course, with that speech on Friday at a Jackson Hole. FTSE 100 futures looking to add 11 points. S&P futures, after closing flat yesterday, pointing a little lower, down 0.2%. NASDAQ 100 futures looking to drop around 0.2 as well, losing 55 points so far in the session as you look at the futures picture for the NASDAQ 100. Let's flip the board and have a look cross-asset then. You've seen a bit of selling across US Treasuries in the last few days. That's moderated today. Stability across US Treasuries in the session this Tuesday. 433 right now on the benchmark US 10-year. Euro dollar at 116. The single currency trading versus the US dollar largely unchanged. Brent, though, is where a bit more action is. You've seen a little bit of weakness for the oil prices on the back of those meetings at the White House between the Ukrainian president and his US counterpart. European leaders, of course, there as well. Brent down 0.7%, and gold etching higher, up 0.2%. UBS sees higher prices for gold with a view that you could get to around 3,700 by June of next year. So President Trump says he has called Vladimir Putin to urge him to begin making plans for a summit with Volodymyr Zelenskiy. It comes after his meeting with the Ukrainian president and several European leaders at the White House on Monday. US Secretary of State Marco Rubio says Washington is working on security guarantees for Kyiv.
Ukraine, post-conflict, has a right to enter into security agreements with other countries. And we will work with our European allies and non-European countries, by the way, to build such a security guarantee. We're working on that right now. We'll continue to work on that. And that'll be something that'll have to be in place after a peace deal so that Ukraine can feel safe moving forward.
Well, let's bring back in Bloomberg's Oliver Crook in Brussels, who was following all of this, of course, for us yesterday. We were hearing then Ollie from the Secretary of State talking about those security guarantees. And that did seem to be one of the clear takeaways from the meetings at the White House. There would be a security and guarantee for Kyiv, for Ukraine. The question is what form that takes, what that looks like.
Yeah, so there are a number of questions around this Article 5 style security guarantee that the United States started talking about over the weekend after that meeting with Trump. I think the first point to make there is that that's something that what I think is very interesting, the United States seems to suggest came out of the Putin-Trump meeting. This is something that can be unilaterally applied by the United States. It doesn't need Russian consent. Potentially it's helpful to get it because it means the Russians understand and have come to a sort of agreement, but it's something that the United States could have committed to in the past. Regardless of that fact, however, I think that the European leaders will leave the White House in part reassured by the fact that Trump has not talked about territorial concessions without Ukraine as the sort of main decider about that. But then secondly, it seems a real commitment to being a part of the security architecture in some way or another post-peace deal. Of course, you still need to get to the peace deal. There's a lot of thorny issues there. But casting our gaze forward, I think that the European leaders will be very pleased to have basically got those reassurances from the President of the United States, despite the fact that there's still ambiguity about what the security guarantees mean. Does it mean that the United States would be an active participant in defending militarily Ukraine after if there were another invasion, another sort of incursion on sovereignty by Russia after a peace deal? Does it mean that there will be European troops stationed within Ukraine? This is something now that when we cast our minds forward, all of these European leaders have come to the table very sort of unified in their approach to Donald Trump. They still need to sell this at home. I'll give you the example of Friedrich Merz in Germany. I've spoken to a number of German politicians through the last few months about this idea of potentially deploying German troops as peacekeeping operations within Ukraine. This is not something that has great traction even in mainstream German politics, to say nothing of the fact that the AfD, the far right within Germany, has just overtaken the CDU in popularity in recent polling, and they are totally opposed to these sorts of things. So there is also a domestic audience to sell this whole conversation to on the European side. That being said, this is a far cry from the sort of disastrous meeting you saw 6 months ago. As we all saw, Zelensky was wearing his sort of black suit there. They sort of joked about that in the Oval Office. So overall, a more positive conversation that occurred between Trump than 6 months ago, and I think constructive. That being said, there are still a lot of open questions, and we'll have to be cast forward to see whether or not there will, in fact, be that trilateral meeting, which all the European leaders have been pushing for.
OK, Oliver Crook on the ground in Brussels with the latest. Ollie, thank you. Let's get more analysis and bring in Hanna Shelest now, Security Studies Programme Director at the think tank Ukrainian Prism. Hanna, good morning. Thank you for joining us. Given what you saw and heard yesterday from the White House in these meetings, do you assess now that Ukraine potentially is a step closer to some kind of deal with Russia?
The problem is that we can be closer to the deal, but are we closer to the peace? And that is the main question that all Ukrainians are asking. The meeting in Washington definitely went much better than everybody expected. At least the first impression that there were less pressure than expected for the President Zelensky, and that President Trump went after the meeting with a much better mood. If you compare the pictures from the White House yesterday and from Alaska a few days ago, his mood was definitely dramatically different. But is it just the mood, the first emotions, or does it mean also that we have a certain substance and agreement between Ukraine, our European allies, and the United States? That's the open question.
Well, so Hanna, on the question of substance, when it comes to this security guarantee from the US and its European allies, what is the minimum that the US would need to provide in terms of that security guarantee to reassure and satisfy Kyiv?
You know, Ukraine already had a bad experience with what we considered as guarantees, because let's remember that in 1994, Ukraine rejected the third biggest in the world arsenal of the nuclear weapons, where exactly in that Budapest memorandum, it was stated the security assurances for Ukraine. Then later in 2003 and 2014, the US said, sorry, there are no guarantees, there are just assurances. Even that in Russian and Ukrainian language, it was translated as guarantees. And in that memorandum, there were already promises about territorial integrity of Ukraine, not attacking Ukraine, and helping it in case it is necessary. So now Ukraine, having that experience of 1994, is much more careful about any type of the guarantees that are brought, that they should be binding, first of all, not just legally binding, but to be sure that the political will not prevent any of the, not only US president, but depending who would join these guarantees, to implement them. Because honestly, after the latest events, I would say the last year, in many countries where they had the US guarantees, like South Korea, like Israel, like Japan, I heard from many experts and politicians, can we really now trust the US guarantees if the political will can change any type of the support or promises that they made before? That's what Ukraine fears as well.
OK, and that's an important historical context, isn't it, in terms of where we are right now, in terms of those potential security guarantees, taking an eye back to 1994. When it comes to territory, Hanna, is it fair to assume that the Ukrainian president will have to concede that some territory will remain in Russian hands? Domestically, politically, what is Zelensky able to do in terms of that question? How far is he able to go in terms of accepting that some territory will need to remain in Russian hands?
Let's say that the change of the territorial integrity of Ukraine is impossible without not only change of the constitution, what is already a very difficult process according to our constitution that should go through the constitutional court with the 2 hearings in the parliament. So it can take 1.5 years at least, but without referendum, that's clearly stated in the constitution as for now. And we see that there is no support in Ukraine among the population for the changes of the territorial integrity of Ukraine, because we are not speaking about the territory, we are speaking about people, Ukrainian people who live in this territory. There is no Russian ethnics or Russian territories. Donetsk always been Ukrainian. By the way, it was established by the British as the city, not even by the Russian Empire. So in this way, that is very difficult for Zelensky to make any significant promises. But also, let's remember, we have legal changes, and we have de facto acceptance that the certain territories are remaining under the Russian occupation, at least temporarily. And probably what they could discuss yesterday, it is the second variant, acknowledging that at least temporarily some of these territories would remain under the Russian control. But then there would be all the questions to the Russian Federation that they need to provide human rights for Ukrainians living in these territories. And if we take Crimea, for example, Russians closed all Ukrainian schools and churches. If you go to Donetsk or Berdyansk, just for having Ukrainian songs at your telephone, students can be arrested. And we have weekly searches at the educational facilities if kids have the Ukrainian songs or even the Ukrainian keyboard at their telephones. So that's why Ukrainians are really would not agree to any significant changes and Russian control over here, because we understand that it would be a very strong suppression of the Ukrainian population at their own land.
Hanna Shelest, Security Studies Programme Director at the think tank Ukrainian Prism, on some of the challenges in terms of moving the needle on these conversations and the take, of course, on what we saw at the White House yesterday. Hanna, thank you. Staying on geopolitics, but shifting to India-China relations now, because Indian Prime Minister Narendra Modi has hailed Russian leader Vladimir Putin, it does tie into China at some point, as a friend, and discussed bilateral cooperation with him in a phone call. The call comes as Modi's government also moves to bolster relations with China. Modi is due to meet with Chinese Foreign Minister Wang Yi today as both nations push to normalise relations amid diplomatic tensions with the US.
We should develop confidence to dispel interference, expand cooperation, and to further consolidate the momentum of improvement and development of China-India relations, so that while pursuing our respective rejuvenation, we can contribute to each other's success.
Relationship, Excellency, our two nations now seek to move ahead. This requires a candid and constructive approach from both sides.
For more, let's bring in Bloomberg government reporter Sudhi Ranjan Sen in New Delhi. Sudhi, what can we expect then from Wang Yi's meeting with Modi later today?
While we are not expecting major announcements, but it's very clear that this meeting is going to set up the bilateral meeting between President Xi Jinping and Prime Minister Modi later in the month. And this also shows, in a way, how the relationship between India and China, from a complete freeze and a very, very bad, acrimonious relationship, is turning the other way around. The Chinese foreign minister yesterday met with the Indian foreign minister. He's meeting India's national security advisor. Talks on the border seems to be going on in a very positive mode. So all in all, what we can expect is a gradual but a definitive thaw and warming of relations between India and China.
OK, a thaw and a warming of relations between India and China. We look ahead to that meeting, of course, between the Indian Prime Minister and Wang Yi, the Foreign Minister of China. Bloomberg government reporter Sudhi Ranjan Sen, thank you on the details and the context around that, in light, of course, of the pressure that both countries are coming under from President Trump and that administration. Coming up, we're going to switch focus. It's a new humanoid robot built to tackle industrial labour gaps head on. We're going to speak to Arnaud Robert from the company behind the robots. That is coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To humanoid robots now, because Hexagon has released its new humanoid bot called Aeon. The tech company says it is built to tackle labour shortages using AI-driven mission control. Hexagon hopes Aeon will be used across multiple sectors, including transportation, manufacturing and logistics. It comes, of course, as Elon Musk doubles down on Tesla's ambitious bet on robotics with the company's upcoming Optimus 3 model. Joining me now is Arnaud Robert, the president of Hexagon's robotics division. Arnaud, good morning. So talk to us about Aeon. What can it do? What are its capabilities? And what are the gaps that it may be able to fill for some of your customers and clients?
Sure. First, thank you for having me, Tom, and good morning. Aeon was really a human robot built specifically for industrial use cases, as you mentioned. And one of the key things is autonomy, actually. And so what can it do? It can do part and object manipulation, referred to as pick and place and sorting. It can do machine tending, bring parts to a certain machine in the line. It can actually do also inspection of either the space it works in or the parts it deals with. It can do reality capture, so a digital twin of your environment. And of course, it can do teleoperation. So one of the key differentiating factors we have, of course, that we use a lot of AI, but at the fundamentally is actually a very sophisticated sensor suite. So we have over 22 sensors in the robot that enables all the use cases I just mentioned.
Okay, and you've partnered with NVIDIA. You've worked closely with NVIDIA, the maker, of course, of those AI accelerators and other hardware and software on this project. What is the biggest kind of roadblock to rolling this kind of technology out, Arnaud? Is it the hardware or is it the software? Is it the AI?
It's a bit of both, actually. So in terms of dexterity, think of replicating human movements with agility. We still have a bit of challenges at the actuators, so the motors that the robot uses. And the second one on AI is really how do you take into account a changing environment and completing the same task when the environment changes, which of course is a lot of AI behind it, as you mentioned. So things that are very simple for us as humans, taking a simple example of putting a nail in the wall. If the hammer is on the left, on the right, then the nail is on the table, not on the table. We can figure this out in seconds. We need the humanoid to be able to do the same, and that's all through spatial intelligence and also semantic intelligence.
And what kind of demand, Arnaud, what kind of demand are you seeing for these robots? Are orders being placed already? Are you getting customers lining up to buy these things, or is there a bit of caution, or is there a bit of skepticism still amongst potential customers?
Yes, I think the skepticism is mostly behind us, to be honest. We've announced in June 2 pilot customers, both Schaeffler and Pilatus, very proud of those partnerships. We're going to announce a few more in the next couple of months. And so I think we're seeing demand pick up quite well. Frankly, as you mentioned at the beginning of the segment, right, is the labor shortage is becoming very real, both in the US and Europe. And so we need those humanoids to come and take a part in the factories.
What are the biggest barriers to adoption at this point?
I would say big barriers of adoption. As I mentioned, it's the precision of some of the movements that we have. And as you can imagine, the factory line is very precise. I think the second one is that the human need to operate fully autonomously in that environment. So at the moment, as you probably were aware, most of the human deployments are within constrained environments, and we need that to be in an open factory. There's a lot of safety concerns around it that we're obviously addressing. And the last one is really the multi-purpose side of it. That's the main advantage of a humanoid, frankly, over many other forms of robots currently used in factories, is that they can do many things through AI learning. Yeah. So we need that range to continue to expand with customer needs. And that's what we're working very, very closely with about 20 customers at the moment, 2 pilots, 18 that we're just dealing with to better understand what those multi-purpose really mean. Yeah.
Arnaud, presumably, if you're a factory worker, you should be slightly concerned about this technology.
You know what, we hear that quite a bit. Our goal is really to complement the workforce. There's 2 main driving factors. One is labor challenges, as I mentioned before. Also safety concerns. A lot of the tasks in the factories are both repetitive, tedious, but also hazardous in many cases. And so we're trying to tackle this. And Pilatus is a great example where the whole structure of the humanoid was really to complement the workforce and allow the workers that are the specialists effectively, right, in those lines, to really move towards a higher value work, solving true engineering problems, optimization, things that they don't have the time to do today, and so on. So we really feel strongly that this is the humanoids will complement the workforce, both for necessity, labor shortage, but also allowing them to work on higher value work.
Okay, Arnaud Robert, president of Hexagon's Robotics division, on the release of AI and what it could mean for future work and for enterprises adopting humanoid robots. Arnaud, thank you. And one earnings story to bring you this morning. Full year underlying profit at BHP has fallen by more than a quarter to its lowest level since the pandemic. The results from the world's largest miner were broadly in line with market expectations and came as prices of BHP's key earners, iron ore and coking coal, came under pressure from soft demand, of course, from China. Take a listen.
Everybody's chasing higher standards of living. to feed that growth, to feed those higher standards of living. The reality is the world's going to need more of the commodities that BHP produces. There's more steel needed to build cities, more copper needed not only to electrify the world, but for data centers, so for AI. And so we've tried to orient the BHP portfolio towards those commodities that the world's going to need more of.
OK, there's plenty more coming up. We're going to give you the UBS forecast on gold and why traders are fading those bets on BOE rate cuts. Stay with us. This is Bloomberg. Welcome back. So the rally that gold's had year to date has been pronounced, outstripping, of course, what we've seen in terms of equities. 27% year to date. UBS says there is further to go. As you look into June of 2026, they project out to next year. They are setting a target of $3,700 per troy ounce, and they say that is largely going to come down to cuts from the Fed, a weaker US dollar, and question marks about Fed independence as well. The call there from UBS. Let's flip the board and have a look. Talking of central banks, the BOE and money markets pairing their bets in terms of the BOE. Now not expecting the Bank of England to go again this year, keeping rates at 4%. That is the expectation. Quite a turnaround from earlier this month when another cut of 25 basis points by the end of this year had been priced in. Now it's less than 50% chance. That is on the back of stickier inflation and, of course, slightly better growth as well. Inflation data dropping tomorrow with the headline number expected to see an increase of 3.7%, of course, well above the Bank of England's target. Bloomberg Terminal users can access these charts, of course, by going to GTV Go on the Bloomberg Terminal. Stay with us. We will be speaking with the Spanish Foreign Minister. That's at 8:30 a.m. UK time for more on the European response to what we saw yesterday in Washington, Ukraine and European defence. The opening trade is up next. This is Bloomberg.